All right, let's jump right in. We're going to be demystifying a topic that, can feel a little intimidating, but it's actually the secret language behind every single successful business, and that's accounting. Our goal today, to translate all those complex rules and numbers into a simple, powerful story that actually makes sense.
So, it all boils down to this one fundamental question. If you have a business, how do you really know if you're winning? Is it just about having cash in your pocket or making a bunch of sales? Well, it's got to be more than that. You need a system, a way to measure, track, and actually understand what's going on. And that system, well, that's accounting.
I want you to think of accounting not as scary math, but as a language. Seriously, it's the official language every business on the planet uses to tell its financial story, what it owns, what it owes, and, whether it's actually making any money. Every time cash moves or a sale is made, accounting is what translates that action into a sentence in the company's story.
Okay, so here's the formal textbook definition. It sounds a bit stuffy, right? But all it's really saying is that there's a clear, step-by-step way to tell that story. First, you identify that a transaction happened. Then you measure it in dollars and cents. You record it so you don't forget. And finally, you communicate it in reports so people can make smart decisions. That's it.
Now, if there is one single thing you take away from this today, let it be this. This is the golden rule. The absolute core principle that everything else in accounting is built on. It's called a dual aspect concept, and it's actually beautiful in its simplicity. Every single business event has two equal and opposite effects, always.
And this is a perfect way to picture it. For everything a business gets on one side, let's say an asset or some kind of benefit, it has to give or owe something of the exact same value on the other side. It's like a perfectly balanced scale. It always has to be level.
Let's see this in action. Our friend, Mr. Agarwala, starts his business with 100,000 rupees of his own money. So the business now has an asset, cash. That's a plus for the business. But at the very same moment, the business now owes that money back to its owner. We call that equity or capital. So look at the equation. You've got 100,000 in assets on the left and 100,000 in equity on the right. It's perfectly balanced.
Okay, so we get it. The scales have to balance. But how does a business actually keep track of this day in and day out? How does a single event, like buying a new van, make its way into the final story? Let's break it down.
It's really just a four-step journey. First, something happens. Mr. Agarwala buys that van. Second, you write it down right away in what's called a journal. You can think of this as the business's daily diary. Third, you organize it. That diary entry gets sorted into a ledger, which is kind of like a big binder with a separate page for every single account, a page for cash, page for vehicles, and so on. And finally, you summarize everything in the final reports.
And all of that recording, all of that organizing, it leads us here, to the final scoreboards. These are the two main reports that tell you, and everyone else who's interested, if the business is actually winning. They each tell a different but equally crucial part of the story.
First up, we've got the profit and loss account, or P&L. The best way to think about this is like a movie of your business's performance over a whole year, or maybe a quarter. It adds up all the money you made, your revenue, and subtracts all the money you spent, your expenses. The final number, that's your bottom line. Did you make a profit or a loss?
And the second one is the balance sheet. Now, if the P&L was a movie, the balance sheet is a photograph. It's a snapshot of your company's financial health on one specific day. It tells you, right now, today, here's everything we own and here's everything we owe. And guess what? It's the ultimate proof that our golden rule, that accounting equation, is still in perfect balance.
So we've gone to all this trouble to create this detailed, balanced financial story. We've got our P&L and our balance sheet. But who's the audience? I mean, who is actually reading this stuff, and why on earth does it matter so much to them?
Well, it turns out a lot of people care. The company's own management needs these reports to make smart decisions. Lenders, like a bank, are definitely going to look at them to decide if you're a good risk for a loan. Your suppliers might check them out to see if it's safe to give you products on credit. And of course, investors are combing through them to decide if your company is a good place to put their hard-earned money.
And this is so crucial. This isn't just some boring internal paperwork. As this quote right from the source material says, having a clear financial story has real-world consequences. It can literally be the difference between getting that big loan you need to grow your business or getting rejected.
The last thing to remember is that accounting isn't some dusty, ancient rulebook that never changes. Oh no, the language of business is always evolving, mostly because of two things: technology and our need for everyone, everywhere to be on the same page.
I mean, it wasn't that long ago that all of this was done by hand in these enormous, heavy ledger books. Today, accounting software does all the heavy lifting. It automates calculations, spits out reports in seconds, and keeps everything safe and backed up. So while the technology has totally changed how we do accounting, the fundamental why, that golden rule of balance, is exactly the same.
And think about this on a global scale. We have these things called accounting standards, like IFRS. You can think of these as the official grammar and spelling rules for the language of business. They make sure that a company's financial report from India can be easily understood and compared to one from Germany or Brazil. It's absolutely essential for the way our world works today.
So you see, accounting isn't really about crunching numbers. It's about telling a clear, truthful story about value. It takes all the messy, complicated things a business does and turns them into a simple narrative of profits, losses, assets, and liabilities. And that brings us to our final thought. Now that you understand the basics of this language, what story does your money tell?